Hello, and welcome to this week's State of the Market update with the Sultan of Sonar. So, this week we see a continuing pattern of the freight markets basically staying as flat as they could possibly be. This means that we shouldn't see rates really declining much from the levels that they're at right now. Over the last week or so, you see the outbound tender rejection index for the United States. It really hasn't moved that much. 17.31% a couple of weeks ago. We're at 17.28 this week. We thought the market might be turning up here in this region here, as things normally do in August. Looking at historical patterns and just being in the freight market in general, you know that late August tends to have a little bit of a push before Labor Day, end of month. The summer doldrums kind of get broken out a little bit before September hits, and that month is kind of a coin toss on whether or not it's going to be good or bad. But again, August still tends to see a little bit of a wake-up call. Now, again, we are in totally new territory for freight markets. If everybody remembers the discussions about where we are historically speaking, looking at the CAS index, we measure the last several years. We have these unique cycles that are kind of predictable. Every July kind of comes down, and August actually kind of turns up a little bit. Well, this has been a unique case of markets just kind of not sure what they're going to do. Now, also note that rates in general, as I pull up the Los Angeles to Dallas DAT for the specifically as it pertains to we made these rates for futures, or DAT made these rates for futures, I should say, in the future. So rates are kind of leveling off, but historically speaking, they have had kind of an August push every year. As 2017 again, kind of a unique year. But if we go back here into let's see, 2016, August kind of sees this general increase. Back here in 2015, which was a terrible year for freight, it still had kind of a recovery into September, August, September, off of July levels. So we're not seeing that right now. Doesn't mean we won't. We are about to hit Labor Day. That could transition us into a totally new era or whatnot. But something that we noticed today is that our outbound tender volume index started to creep up a little bit. I'm going to zoom in for you just to show you what I'm talking about. So again, this is one day, and one day does not a pattern make, but it is a nice little jump. We're back up to 99.82. We were sitting down here at 99.18. We had about 0.7% jump in volume over the last day, and that is a pretty significant jump considering that we've been on this pretty sharp decline through the month of July, and then we've basically been flat and a little bit down over the last week or so in the month of August. So what that means for us is that we just need to stay focused and pay attention and try to find some markets where we may need to move our trucks if we're a carrier, or continuing to figure out where some of these opportunities lie. If you're a broker, if you're a shipper, you are probably very happy right now as rates are kind of coming down. In the spot market, you're probably not playing in the spot market too often unless you have some unexpected volumes coming out and into a good time of year where you're really trying to get, I know a lot of people are trying to control their freight costs on these earnings calls that we listen to. And purchase transportation, even for the carrier, is a big deal. So right now the market appears to be pretty stable. But we are at that point of the year where a year ago we had hurricanes coming through. I think everybody remembers Irma and Harvey. The hurricane season this year, not really a factor. The fourth time in recorded history, I believe, that we have not had a hurricane in the month of August. Obviously does not mean that we will be hurricane free for the rest of the year. And not that we are hoping for hurricanes, but they are the single biggest disruptor of just about anything on the continental U.S. outside of freight markets, and freight markets in general are impacted by that type of weather event for long periods of time, as most of us probably already know. But one of the markets that was hit by Hurricane Harvey last year, moving on from the hurricane factor, Houston, does have a little bit of life in it, it would seem. So we're seeing, this is the outbound tender volume index for Houston. It's something that showed up on our maps recently and has shown up on a lot of people's maps that are subscribers to Sonar. It's an intriguing market to me because, you know, it is kind of a regional market, but to see this kind of movement and volume as both inbound and outbound volumes are increasing right now. And as I go into the outbound tender rejection index, I wouldn't expect to see a huge movement here because inbound volumes are exceeding outbound volumes, and that tends to mean that there's more trucks available in the market to get our loads out of. But the fact that they're both moving up kind of makes me think that there's something to this area here. And in these times where the market is generally flat, I'm paying attention to just about anything that moves the needle. And this one did actually move the needle as volume has increased in the area. I don't know if this is going to be anything long running, but again, I'd be paying attention to it. So as we go into the Labor Day market, not a lot really going on in a large part of the country in terms of volatility. There are still other isolated instances out there where some markets have shown up. The Phoenix market, for instance, had a big moment about a week ago. Continue to look at your maps for any kind of targeted markets that you may be interested in. We are, like I said before, entering the peak of hurricane season. It's been slow thus far, but I believe that the long-range forecasts do have a couple of things potentially spinning up next week, and it could be in the Gulf of Mexico by the end of next week. So with all that in mind, we are poised to enter September with a pretty flat market, which isn't necessarily bad as rates are still pretty high. They're year over year. We are still well above where we were a year ago in terms of if you are a broker, you're still probably making some decent money. If you're a carrier, you're still able to move your trucks around the country as volume is still really good. So nothing really says that this is going to be a bad situation. It just means that right now we have low volatility, which is not necessarily a bad thing. I think 2 out of the 3 people that I just mentioned there are actually pretty happy about that. So stay tuned for more market updates and have a good week and a good Labor Day. Thank you.